In this video, I'll explain why, despite the initial impression that his projections have already been refuted by the company's dismal performance in 2022, well-known YouTuber Meet Kevin's positive forecasts about Tesla stock will come true. As you may remember, in the summer of last year, after weeks of news coverage of the company's attempts to boost its market value, Tesla announced a 3-for-1 stock split in an attempt to improve investor access to the company's shares. Business stories on EVs at the time were alarmist, meant to sound something like this. In light of the split, investors and analysts set terrifying price estimates for Tesla. One such expert was Meet Kevin, a professional YouTuber, serial investor, and longtime supporter of Tesla, who explained why he thought the company will perform spectacularly after the split. As we may have probably surmised, Kevin's forecasts haven't come true thus far. The previous few months have been disastrous for the venerable EV manufacturer, Tesla, with shares down 69% year over year. However, there's still reason to believe that Kevin's sanguine predictions on the Tesla stock split will materialize. To ensure you don't miss any updates, please hit the like, subscribe, and turn on the alerts buttons if you like this video. Back in the day, when Tesla announced a 3-for-1 stock split, analysts like myself responded, hoping that this would help restore the company's value in the market. After the split, Kevin was hoping for an improvement in the stock's performance. According to Kevin, a financial expert from America who is passionate about investing, Tesla's proposed 3-for-1 stock split could benefit both the company and investors. After stock splits in the U.S., corporations typically outperform the S&P 500, an index that tracks 500 publicly traded companies. 3 new shares were awarded for each share that you already owned in Tesla's 3-for-1 stock split. Still, the split had no impact on the value of your stock holdings. When a company's stock price increases to the point where the average investor can no longer afford to buy, this is a typical response. A share of Tesla stock was worth about $714 at the time of the split. With a price of about $238 on the split day, the stock became more accessible to investors as a result of the split. Tesla asserts that a stock split was the most effective strategy to draw in new investors since individual investors have demonstrated a significant desire to purchase the company's shares. At the time, Kevin believed that the stock split was a good idea because Tesla's earnings predictions are more reasonable than those of other tech businesses. As he said during the split, Kevin, like other Tesla bulls, regarded the stock split as a chance to buy more Tesla shares. Despite recent events, Kevin's prognosis may begin to make sense if the price of Tesla shares rises and produces more money for the company's stockholders. Kevin explained why he thought Tesla's market cap would top $10 trillion in 10 years at the time of the split. Tesla is the firm to purchase and invest in when it comes to robots at the Cyber Rodeo. Kevin predicts that in the next 2 years, Tesla will declare the opening of 5 to 10 more gigafactories, defending the construction with the claim that its manufacturing method of copying and pasting makes it possible. Tesla is focusing more on artificial intelligence and is making producing cars less of a priority. The company's new aspirations to enter the artificial intelligence area are impressive, to put it lightly. Despite the difficulties the firm is now facing, Kevin thinks Tesla has potential for its supply chain. China and other nations are gradually becoming more interested in Tesla's electric cars, so whatever challenges the business is currently encountering might only be short-term. Kevin believes that Tesla's robotic humanoid might be a game-changer for the company since it addresses the main concern surrounding its project, which is the possibility that humanity would eventually be replaced by robots. Tesla's Optimus will increase productivity and enable the pursuit of more lucrative commercial opportunities. Given his optimistic assessment of Tesla's future prospects, it is evident that Kevin is enthusiastic about the company and its shares. Fortunately, a lot of stock analysts agree with him. Following the announcement of the June stock split, 12 of 45 financial analysts following Tesla, according to CNN Money, gave the shares an excellent buy rating with an average price objective of $1,000. 12 analysts have given Tesla a positive rating and advised investors to purchase and hold onto the company for the long term. It makes no sense to me, even with the recent lackluster performance. The foundation of the business is still flawless. There is a need. The business continues to meet that need, and the public's perception of electric vehicles continues to change. For some time now, Tesla has been discussing the ideas behind their Cybertruck and robotaxi. Not only are the public's eyes focused on Tesla's more recent car models, but these advancements in the EV sector may also offer Tesla a competitive edge over its competitors. The business sold more than 167,572 Model 3s in 2022, ranking among the top manufacturers in terms of sales. Due to its rapid growth and several tactics to raise its market worth, Tesla could see a significant boost in its stock price in the future. Setting a high price target for Tesla stock may not be the best course of action, as the company hasn't been immune to market difficulties in recent months, and a number of variables have kept the stock from plunging through the roof. Hearing that Kevin tweets an agreement is encouraging. The financial analysis states that the stock market is expensive. Therefore, the estimate of $3,000 per share following the split in 2024 might be a bit too high. Let's also take into account the thoughts of other analysts. According to Brian Johnson's analysis, a decrease in Shanghai output from 315,000 to 251,000 may have contributed to Tesla's first quarter production and profitability falling short of projections. Recently, the global British bank Barclays raised its target price for Tesla to $370 per share. For their respective stocks, RBC Capital and UBS have set target prices of $1,100. The two new gigafactories for Tesla are producing more, which is the cause of the large order backlog. Price increases and process innovation are the reasons for Tesla's better profits. Patrick Kummel listed the EV company's enhanced supply chain as one of its three primary justifications for its price target, which offers it a competitive edge over rival electric car manufacturers. Development in software, batteries, and semiconductors by Tesla would spur growth and profitability. For the foreseeable future, American YouTuber Kevin is confident that Tesla will continuously beat its competitors. His most recent tweet indicates that he possesses over 50 Tesla shares. The performance of the company as a whole will matter most, even if Tesla's stock price increases following the split. Fortunately, this is not the first time Tesla has divided its shares. The corporation announced a 5-for-1 split on August 31, 2020, and it accomplished the same thing. The increase in the stock price occurred in a comparable range. The 20-for-1 stock split that Amazon recently carried out was well received by investors. This doesn't guarantee that Tesla's stock price would rise after the split, as we all know it hasn't. But it might offer us a sense of what might occur in 2 or 3 years. It is a good idea to follow Kevin's suggestion and diversify your investments over other markets if you want to avoid losing your entire investment account. It's probable that the split influenced investors' choices to buy Tesla shares, but it's still too early to tell if the stock price will increase or decrease over the next 9 to 12 months. Do you see Tesla in the same positive light as Kevin, or do you think differently? Please share your ideas by leaving a comment below. Furthermore, don't forget to hit the like and subscribe buttons. We are grateful that you took the time to view this, and we hope to see you soon. Goodbye. Music.